Good morning, everyone. This is Ryan Edner with your Tuesday, October 15th morning wake-up call. We'll start off by looking at most grain markets in the overnight, down again here. It does seem like late last week the funds had possibly wrapped up their short covering. Friday's Commitment to Traders report showed funds buying 44,000 corn, 13,000 beans. So that now puts each market funds at 7% of record short corn, 12% record short beans, and 18% record short wheat. All three of those numbers are close enough to assume that those are all small enough numbers to go ahead and assume that we could call the funds flat right now. So we did see fund trade slow down late last week. We haven't really seen any sign of it here yesterday. So without the fund support here, for the most part, it looks like we're just seeing harvest pressure step in. And in fact, some may have waited while price was moving up before making too many sales. But now that it's starting to turn the other way, we may even see harvest pressure pick up even more as those out in the field want to get something sold here before price slides too far. So that's also something to consider here. The fair value, we're under fair value in both corn and beans, but again, during harvest, during normal harvest pressure, that isn't uncommon to fall under fair value. So we wouldn't get too concerned about the current move. Generally expecting better support at any level under $10 in beans. And when corn approaches $4, which may happen today, we would expect to see better general support there too. Over in the wheat, we do see an improved hard red winter wheat forecast again here this morning. Not overly heavy rains, but a little bit more rains added to that area than we saw yesterday. Also, overnight, we'll get caught up in the fact that Russia also sees slightly improved weather forecasts as well. So a couple of reasons to see a bit of pressure on wheat. And while we're talking weather, we will briefly mention South American weather maps picked up rains even further. Now the 10-day maps, as of this morning, have more rain than we've seen on those maps in a couple of months. So maybe still a bit too early to say a bulk of this selling has to do with South American maps. We would still make the case that 80% is normal harvest pressure, and maybe 20% are some longs who are getting out now that they see better forecasts. But we will mention that here because once beans move to 75 or 80% harvested, we do expect attention to turn over to South American weather maps. Yesterday, we didn't get our progress reports. They were delayed a day until this afternoon. Flipping over to cattle, the news is somewhat the same in cattle here. The show list is down 900, essentially at a neutral number. Box beef was up 210 choice and 38 cents select. So still seeing box beef grind a bit higher. That puts packer profits just a bit over $4. And in the last 2 weeks, we've seen that $4 is enough to start trade with the assumption of about a $1 higher cash trade. So it's likely today and tomorrow, that's what traders will be anticipating, is at least a $1 higher cash trade. Now, we have multiple chart resistance levels coming up soon in the December cattle. Just to point those out again here, last week's high would be the first one at 188.55. Then the 6-month high in December cattle's 190.075. And then the 12-month high is 191.625. So in the matter of $3-4 here, we see three major resistance levels, including one of them being the 12-month high for December cattle. So those are a few levels to keep in mind while we're looking for the grind higher, that you may find a few more sellers and even hedgers as we approach 6 and 12-month highs. So that's what we have here for everyone today. If you have any questions, of course, always just give me a call direct and continue tuning into our morning wake-up calls.